Good morning. This is Howie, and I'm here to help you win with money. So, the market is open. You see that? Really strong. I'm just going to go over what stock I bought today. So, I'm going to give you a quick preview or review of what I did yesterday first. So, yesterday, this thing popped, Biogen popped $100. And you see that? And then now it's down $23. So, what did I end up doing? Here you see my transaction history. I punched it in using a filter and I sold it yesterday. I got 8,700 for it. I got in at around 300 and whatever it was, 305 or 308. I don't remember exactly, but I was up 13% yesterday. So I'm glad I sold because you see this thing is now down. So I took the money and I did something else. And here is my transaction history. Here you see it. Yesterday I sold, and then this morning, look what happened. I put in a limit, not a limit order, a market order at open, and I definitely overpaid for FASTLY, FSLY. So I overpaid, but I wasn't gonna be home or near my computer. I don't trade on mobile phones or anything else. So I just put in a market order, and look what happened. I definitely overpaid. So I'm gonna show you what happened. So because I put in a market order, you see what happened? It popped in the morning, overpaid. I paid 74, and then it's been down since. Okay, but worst case scenario is I didn't lose 6% if I left it in Biogen. And the other thing I did over here, you'll see it. The other thing I did is because I can get 100 shares, Biogen costs well over $350 a share. And these are, you see this? So I Fastly was $72 a share or 74 what I paid, but I can buy 100 shares. And then what I did was when I was able to get back on the computer today, I put in an order in and I put a cover call on this. So I received another 100, right? And I'm willing to give it up at 78.50, which is more than $74. So it's it's not bad, right? Options trading, and this is what I do it for, right? Now, if it gets called away, I don't really care. It's a new holding. But if I held this thing for 5 to 6 years and this thing is 500% gainer, I generally don't like letting my shares get called away. I'll roll my cover call. But we're early in this game. We'll see what happens. Now let's look at some details. Let's look at the chart. You see this? Fastly was growing, and then it popped, and it went, and then it popped again. And look, there is a pattern. It generally pops. Now on the downside, it's almost the same. You see this? So on the downside, it did the same, right? Because if you have a stock that pops a lot, when bad news come out, it's going to drop a lot, and that's what happened. And so I missed the bottom here, but again, I took money from one trade to pay for this trade. So let's just back up a little bit. You see this growth chart? I mean, this is pretty good. The trend it's looking really good. And what I end up doing is I end up trading one company for another. So let's just take a quick look at what that would look like if you did a comparison over the last few days. So you see that Biogen took a big pop, right? I sold out, moved it into a different company. So another way to visualize this is this concept. If you started with the same starting position, Fastly was up, then it underperformed, another one outperformed, right? So the way I look at it is if you had both, basically you sell your winner, move it into your loser because you know at some point that thing can actually outperform again. So that's the thinking here. You see, red is the Biogen. On average, is doing better on a 3-month chart. If you look at the 6-month, you see this. Fastly has done much better. So because I'm trading in and out, or not in and out, but I'm moving money from one security to the next, right? It's a good way to look at this and say, hey, I think there's definitely some growth here. You see this, Fastly was up 400% at one point, then it's down. So I figured, let me sell a winner, move money into something that I think has the potential to reach $120 a share or whatever it was. Here's the old high. 136, and that wasn't even that long ago. Like I said, if you look at the 1 month chart, you see that. So I end up buying this. Now, I'm not a financial planner or advisor. Make sure you do your own due diligence, but this is what I end up doing in my portfolio. I sold one, bought something else that I like, and then write options on it. So why did I end up buying Fastly? Here's another article. For some of you who don't know, Fastly competes in the CDN space, Content Delivery Network. One of its biggest competitors is Akamai, and it's a competitive space. But there's a lot of companies paying for these type of services because they also provide security services. It prevents hackers or denial attacks. DDoS is the more common attack where they flood your website with traffic and then no one else can go to it. So these companies have a legitimate service. People need their products. And here's the news. This article is only 4 days old. But again, this covers the past. They didn't do so well in earnings. There was some issue with the largest customer with TikTok. I think they got it down. But when you're buying stock, if you're not day trading, you should think about the long-term growth. Will this company continue to grow? And that's the question. And so this goes into the cost of the stock. Sure, the stock ran up huge. You see, then they're trying to say if you compare it to the largest player in the group, right, Fastly stock is definitely very, very expensive. So I'm betting on it. And in fact, I'm betting on both the favorite. I actually do own shares of Akamai. As a disclaimer, I did not pay anywhere near $100 for the Akamai shares. I got in pretty cheap. So I got in cheap, much lower than even $50. So I'm up, and I made a lot of money in Akamai. So now I'm going to buy Fastly. Now Akamai is large. You see, $16 billion company. Fastly is half the size. So let's see, can they execute? And that's why I'm diversifying, right? Sometimes you can bet on both the first horse and the second horse. You can bet on MasterCard and Visa. You can bet on Coke and Pepsi. You don't have to be a binary choice. You don't have to buy one or the other. If you like the industry and you like the business, sometimes it's okay to buy both. And that's what I end up doing. I already own Akamai, and again, I got in years ago. So today, I took the money from Biogen from yesterday's sale, and I moved it into Fastly. So let's see how it goes. Wish me luck. Comment below. Did you ever buy it? Are you planning on buying it? Tell me why. It's a very popular stock. Robinhood investors love it. And there's a lot of reasons to like it. The high growth, cloud-based software as a service type businesses are doing really well right now. And I think you got another 10 years of growth or more embedded in this stock. So good luck. I hope you the best. And again, let's hit the like and share button. As always, I'm here to help you win with money. Let's share this content. Let's help our friends make it. You do this together, and let's do this $1 at a time. And I will see you soon, and have a profitable trading day.